Ladies and gentlemen, I would like to wish you very welcome to this working session on risk transfer and risk insurance for resilience. My name is Riikka Laatu. I come from Finland and I'm one of the co-chairs of this session. The session will give us an opportunity to follow up progress since the Sendai meeting in 2015 and other 2015 global meetings, the 2030 Agenda on Sustainable Development and also the Paris meeting on climate change. All of those meetings acknowledged the role of risk insurance and risk transfer as very important components when it comes to resilience. Now it's the time to update us on the progress after those meetings, as well as share good experiences, good practices from different parts of the world. There has indeed been progress since that time, but despite that progress, disaster insurance penetration still is very low, particularly when it comes to LDCs and the low and middle income countries. I'll just give you an example of progress in Finland, which is my own country. We used to have a very slow and insufficient government-based flood compensation system. We mainly have floods in springtime when the snow melts, and it's recurrent every spring, practically speaking. The system was replaced by an insurance-based system in 2014, actually, as it was recognized that an insurance-based system can be more flexible and also can be designed to provide proper incentives for people. So now the flood compensation is included into the home and property insurances, which a great majority of households have, and it is working well. I want to give the floor to my co-chair, Mr. Simon Young, who is an advisor to the African Risk Capacity Insurance Company Limited, for his opening words. Simon, please.
Thank you very much, Riikka, and good morning, everybody. It's a pleasure to be here in Cancun at the Global Platform. I come from a disaster risk reduction and I guess hazard understanding background, so this transition into risk management and insurance has been a gradual one for me, but I very much recognize the role now that insurance can play within a bigger risk management framework. We are going to be using a little bit of insurance jargon during the presentation, so I wanted to very quickly just give you a few words to remember, or the description for a few words that are going to come up, so you have a good understanding of what the speakers are going to say. One of those pieces that I want to describe very quickly is parametric insurance. Parametric insurance is a relatively new concept. There are people in this room who have been part of the community that has developed parametric insurance. And parametric insurance uses, instead of a traditional insurance policy, which would pay when you lost something or when something was damaged, and it would pay in full to replace that. So if your house was damaged, it would pay for the replacement of your roof or whatever was damaged. Parametric insurance uses an indicator which is actually related to the hazard, so the natural phenomena that has caused the damage. So if we think about hurricanes, cyclones, very high winds generally are what does a lot of damage. And a parametric insurance contract would use the actual wind speed that was affecting a particular area rather than the actual damage that was being done to properties or other infrastructure or assets. And by using the parameter of the hazard, we can actually, and effectively we're using that as a proxy, so as an approximation of what the loss is going to be. we can actually take several major steps forward. One is that we can reduce the cost of insurance. So insurance generally can be quite expensive because there's quite a lot of costs around understanding what the losses are when they've happened. In a parametric insurance contract, we don't need to go and find out actually what happened on the ground. We just need to measure the wind speed in the case that I was describing. So that makes it a lot cheaper. The other big advantage is that it can be settled very quickly, so you can receive a payout extremely quickly. Basically, once a cyclone has passed by, a payout on a parametric insurance contract can be calculated within a few hours or days, and the payout can be made very quickly as well. And so this enables liquidity or payments to be made and to get to work almost immediately after a disaster. And there's as you all know, there's a huge value in addressing the outcomes of a disaster, the impacts of a disaster very quickly. We can save a lot of money in the long term by getting to work on addressing the damage quickly. There's a significant downside to parametric insurance, and it's the other term that I want to describe very quickly, and that's something called basis risk. And it doesn't translate very well sometimes, so apologies for that. But basis risk is the difference between what a payout you might get from a parametric insurance contract. So based on the wind speed and what that might do to your house, and what actually happens to your house in that cyclone. And however good we are at understanding what natural phenomena do to infrastructure and individuals and crops, etc., we don't know exactly what's going to happen. And so this basis risk is this difference, which can be very serious, of course, for an individual farmer whose crop has failed because of a drought. They don't mind whether the amount of rainfall has reached a certain level or not. They just care that their crop has been destroyed. So we have to put in place tools and mechanisms to manage this basis risk if we're going to develop parametric insurance. I just wanted to say that because a couple of the speakers are going to be talking about both parametric insurance and basis risk. Parametric insurance is a major innovation, but it does come with some downsides. So with that, I'll hand back to Rika to introduce the panelists.
Thank you, Simon. We have a number of panelists, very prominent panelists, who will present different perspectives to the issue at hand today. And let me introduce them to you in the order that they're going to speak. The first speaker will be Mr. Sean Tabak, who is the CEO of the International Cooperative and Mutual Insurance Federation, and also a member of the steering committee of the Insurance Development Forum. And in this panel today, he will give us an overview of where we are, and he will also talk about the options, various options available for us. After him, we will have Mr. Robert Muir-Wood over there, who is the Chief Research Officer, Risk Management Solutions. And in this panel today, he will talk about risk modeling and applications of various risk models. After him, we will have Mr. Phil Evans, who is the Chief Operating Officer of Met Office in the UK. And he will today give us a perspective from the public sector point of view. After him, we will have Liliana Cardoso de Cano over there, who is the general manager of Taji Insurance Company, which is a cooperative-based insurance company in Paraguay. And he will tell us about their experiences in working with poor farmers in Paraguay. And finally, as a fifth panelist, we have Sofia Valais, who works with Oxfam, and she is a program manager for the so-called R4 program, which is a program for Rural Resilience Initiative in Africa. And she will talk about making sure that insurance is designed in such a way that it brings resilience, actually, which is the topic of our working session today. So these are our prominent panelists today, and after this we can start with the first panelist. Sean, the floor is yours.
Thank you, Rika. Your Excellencies, ladies and gentlemen, good afternoon. The Sendai Agreement and the 2030 Agenda demanded greater collaboration to deepen and expand the role of all stakeholders, and provided the insurance sector a new impetus to engage in order to transform the practice of post-disaster financing and reducing disaster risk. For centuries, the insurance industry has been providing protection for people and property from disasters. But insurance is not just a paid claim when shocks occur. Operating through a public, private, and mutual cooperative modalities, sustainable insurance systems evaluate risk, define and enforce standards of resilience, such as building codes, and enable communities to spread the residual risk. With over 300 years of experience in understanding risk, the insurance industry has a crucial role to play in promoting resilience across the world. By measuring risk, communities, cities, local and national governments can identify, plan and manage risks to build resilience to shocks that were previously uncertain, because what gets measured can be managed. Communities have been managing their risk in many forms for centuries. Looking back to the 18th and 19th century, the extreme poverty experienced by those in the pre-industrial revolution, where those most vulnerable had no access to a social safety net mechanism, gave way to the origins of collective insurance. Communities came together to pool their risks and create social safety nets of their own. These pools gradually grew into larger cooperatives and mutuals, empowering communities to work collectively in the face of extreme adversity. This is the same story now being lived out today, where those in the most vulnerable communities pay the highest price. So this approach, taken for over 50 years, developing insurance solutions for low-income communities, and it works. It actually works. Effective and resilient insurance systems put individuals at the center of decision-making. Understanding and engaging the communities who face the risk, delivering on specific needs to insurance resilience, and reducing disaster risk to co-create services is the paradigm shift needed to move beyond merely providing insurance products to creating a platform for risk reduction and sustainable insurance protection. Insurance is a component of an overall resilience strategy, which includes education, access, and risk mitigation. However, insurance is only effective when coupled with effective mechanisms to reduce risk. Working with communities to build literacy to their risk exposure with a shared objective to reduce risk builds trust and creates a robust platform to deliver at scale. This scale is essential if we are to close the protection gap and address the underlying drivers of risk. The issue paper for this session states that we must capture and assess the additional value derived from insurance mechanisms, namely the building of societal confidence and ultimately societal resilience and the regeneration of place-based ecological resilience. For the insurance industry, this is not the outcome, but actually the starting point. And societal confidence comes from educating, empowering, and enabling communities with a wider variety of stakeholders, including the insurance industry. Trust has to be created, and resilience begins with engaging the communities that are being served, but have been traditionally excluded. The development of microinsurance over the past 15 years has proved an integral tool for poverty alleviation. It is estimated that over 500 million now have some form of microinsurance coverage. However, Evidence is suggesting the industry has moved too fast and too anxious to achieve scale without focusing on making a real impact on people's livelihoods. With a potential market of over 2 billion people still to be given access, it's an important junction we are at today. Building resilient insurance system takes a long time, but ultimately is far more sustainable. Just look at the average of mutual insurers in my sector. It's 95 years old. So if we build it right, it will grow and assist significantly in the sustainable development of a country. And some of the best examples can be seen where risk is pooled at the community level. Let me share an example with you of Card MBA in the Philippines. Card MBA started over 20 years ago to provide life insurance for the small credit loans given to farmers, of which 98% are women. Today, Card MBA has 3 million policyholders covering 13 million individuals and is still run by the women in the communities. These women act as the governance, the educators, and the claims assessors. They have built the trust in the communities by educating, empowering, and enabling their communities to deal with the losses and in turn be more resilient. They operate a 135 claim system whereby all claims are paid within 5 days of a loss. The scheme was even sustainable during Typhoon Haiyan, where they were able to pay out within the 5-day period. Last year, Card MBA launched their premium project to improve resilience of SMEs, mostly women micro-enterprises, which cover all their needs in case of a disaster for an annual premium of between $2 and $3 US. The aim is to roll this out over the 3 million existing members over the next 5 years. The technical and financial assistance is being given by ICMIF members to the value of around $3 million. So you can see the roadmap is an efficient and effective way to scale up an existing trusted insurer and introduce climate-specific products. The challenges they had to reach success are pretty much the same for most community-based insurers. Firstly, technical assistance. Building capacity is vital given that most communities do not have insurance expertise. Secondly, financial support. Adopting an holistic approach takes longer and premiums have to be kept low. However, additional resources are needed to fund the education and in the added value services that make the insurance product tangible and sustainable and appealing to the community. Thirdly, the regulatory environment must enable mutual insurance mechanisms serving low-income communities to be formed. 45% of the world's countries do not allow this, and also enable them to develop and to serve the wider community. There are 3 challenges for success that we are tackling through the ICMIF 555 strategy in order to shorten the development cycle for community-based organizations working with low-income communities. Launched in December 2015 at the COP21 summit in Paris, the 555 strategy aims to provide resilience insurance to 5 million policies in 5 countries in 5 years. The 5 million policyholders represent 25 million individuals, which would mean that one initiative will respond to 25% of the G7 target of 100 million individuals by 2020 from the private sector. The first 6 months of operation show that already 1.3 million individuals have been insured who previously were not, and that is just from 2 initiatives that are operationalized. The G7 target has also been adopted by the Insurance Development Forum. The Insurance Development Forum, of which ICMIF is one of the founding members, is a unique public-private partnership whose mission is understanding risk to create resilient platforms for sustainable growth and human dignity. By applying insurers' risk expertise to insurance-related challenges, the opportunities presented by the 2030 Agenda. Efforts to improve global resilience and address the protection gap have previously been primarily driven by a handful of private-public stakeholders. Given the scale, scope, and complexity of resilience and protection gap challenge, a coordinated and collaborative approach bringing together the insurance industry and the relevant stakeholders is recognized as critical. I am the co-chair of the IDF Microinsurance Working Group along with Joan Lamb-Tennant, the CEO at Blue Marble. We have assembled a working group of 40 global experts in this area, about 50% from industry and 50% from the civil society. Our aim is to meet the G7 Insure Resilience target of an additional 100 million vulnerable people to be more resilient towards the impact of climate change through insurance-based solutions. Our recent survey collected information on 34 projects in 22 countries, which are currently funded to reach 21 million households by 2020. There is a 60-40 split between life and non-life products, offered with a large percentage targeted at farmers and women. Our aim is to close the remaining gap, which currently stands at 79 million, through the public-private partnership collaboration and exchange the best practices noted in the Sendai Agreement. Real risk mitigation and minimization will not happen until we can support those at risk at the community level and provide them with the means to protect their lives and livelihoods by using microinsurance as a risk transfer mechanism with all the additional benefits it can deliver. I'd like to conclude by restating our belief that insurance is more than a policy. Insurance and its related capabilities provide mechanisms to build risk literacy by engaging with communities with the shared objective to reduce the risks they face. We believe that insurance is the ultimate community product to support societal resilience. Thank you very much, ladies and gentlemen.
Thank you, Sean, on your updates on where we are now, and particularly regarding microinsurance. The next speaker is Robert Wood. Robert, you have the floor next.
Okay, thank you very much, everybody. Thank you for the invitation to be on this panel. I'm going to add an additional risk, which is to try and show some slides. So if we could possibly we have actually got the slides, okay. So before we can plan how to structure risk transfer as well as where to invest most effectively in risk reduction, we need to have a good understanding of the landscape of disaster risk. What are the metrics? What are the metrics of this landscape? Maybe the risk of loss of life, maybe the risk of economic damage or lost livelihoods. How do we create an understanding? How do we map this landscape? And then once we can map and model risk, how can we use this understanding to promote risk literacy? Teach people that living on the steep slope of the landslide scar or close to the river in the floodplain or in an unreinforced concrete house next to a plate boundary can be deadly. And then this risk mapping should help us to identify where we can most profitably invest in risk reduction, as well as how to structure fair and sustainable risk transfer mechanisms. So key to this process is the risk equation, taking the hazard where the earthquake or floods or hurricanes can occur, along with the exposure that could be the building stock of the informal settlements in Caracas, as here, along with the vulnerability of these buildings to come up with damage. Given the shaking, we can come up with an understanding of the risk. We might view this as an exceedance probability curve, how much we can expect to lose on average every 50 or 100 years, or we can make a map of the risk, and we can develop this modeling approach for different metrics. Monetary loss, as might be in the interest of the finance minister, but we can also make a map, we can make a model of the risk of casualties. And I say the landscape of risk intentionally, because although we cannot see it, risk is real and can be mapped. It's the third dimension in the annualized risk cost as a percentage of property value. We can see here, this is a view from the north of Florida down to the south, and you'll see that Florida is surrounded by a great series of mountains. Those are mountains of risk. And as I say, they're real. And actually, once we get an understanding, there's a landscape in which we can orientate ourselves. We can work out where to focus our actions in terms of most profitably reducing risk or transferring risk. So this risk landscape is what gives insurers their competitive advantage. So insurers need this understanding in order to identify how much to price risk itself. As they price catastrophe insurance and accumulate portfolios of exposure, they'll be considering how best to diversify their risk. So diversifying means they want to find ways of linking together locations which are not going to be impacted at the same time. Most of the time, this is beyond the capacity. Even the largest insurers and reinsurers, with one or two exceptions, they don't have that kind of capability in-house to have all the diverse set of scientific expertise. So most model development for the insurance industry is outsourced to modeling companies like the one I work for, RMS. The modeling companies self-invest in developing new models based on where they can see there is interest from insurers to license the models. Inevitably, this does not include the poorer countries where there is no substantial insurance sector. So, however, while this way of funding catastrophe model development is efficient and requires no government funding, it means that models will not spontaneously be developed for low-income countries. Instead, this will require donor funding. So if donors fund the model development as they should do and as they are already doing, then it is up to them how the results of the modeling should be distributed. They could potentially make the mapped risk information freely available to everybody, but maybe they might even charge insurers a modest license fee for having access to the full modeling capability if that's going to help insurers with their business model. So risk modeling is not just undertaken to support insurance. If you are a city contemplating building a new flood wall, for example, and you want to do a full cost-benefit analysis for exploring how high to build the wall, you will need to apply a catastrophe modeling approach to identify what are the benefits. The benefits are the flood losses that will not happen as a result of the wall, and we can measure what those benefits are as we test out the wall at different elevations. So when we are trying to encourage insurability in a low-income country, we are looking at 4 key components. We know that insurability is like planting seeds without water. Insurability has to have these predisposing factors before insurance is going to take off. These 4 factors are: first comes information on the risk landscape. Insurers can't write business unless they understand the height of the risk. Second, they will need high quality data on the risks to be insured, such as the building age, materials, height, etc. Third, we will need to have insurance customers who understand how insurance works. This is not straightforward, that you only expect premium recovery when you suffer a significant loss. And last and perhaps most important, we need government engagement in helping keep the level of risks manageable, as well as applying a regulatory environment to ensure that insurers will be solvent, have the money when it comes to a significant loss. Now, when we say that risk transfer helps reduce risk, the way this works is typically that in order to have insurance in the first place, you need active government engagement in risk management. And it's this link between the fact that having insurance and having government engagement, it is that which is the principal driver of risk reduction itself. So when we need fair and sustainable risk transfer mechanisms for low-income countries, I think it's worth articulating what do we mean by fair and sustainable. Fair in that the insurer is working as much as possible at cost, that they're not making a large profit out of working in poor countries. Sustainable, so that in the medium term the scheme becomes self-funding or is an acknowledged mechanism for distributing subsidies, as happens with a lot of farm and agricultural insurance in China or the US or India. Sustainable in that risk transfer is linked with an active program of risk education and risk reduction, that loss experience is released by insurance, as it is now in Denmark and Norway and Australia, for research to identify how to reduce risk. It's not simply held by insurance organizations and not given out. that investments in risk reduction are rewarded with reduced cost of insurance, and that it is linked with some pro-poor policies, that there are subsidies to help those who can't otherwise afford it. So a key question is, as we look at insurance mechanisms, and as Simon Young already mentioned, we find that actually parametric insurance mechanisms, which have some parametric trigger, are favored by the fact that we don't need to identify what exactly was the loss. It is the most difficult part of the insurance mechanism is the claims process to determine what was the actual economic loss. So, but the challenge is that we introduce basis risk by doing this. Basis risk is the difference between what gets paid out and what was the actual loss. And it's really important we have a transparent process around highlighting what this basis risk is. At present, we have a number of parametric insurance schemes which, to my mind, have not properly explored and revealed what their underlying basis risk is. And the danger is of mechanisms of this kind is that actually sooner or later they will, if they have high intrinsic basis risk, they'll come across a situation where someone will not get a payout even after they've suffered a loss. Now, for grown-up people, the situation of basis risk is fair enough. I think we can accept there are situations where we don't get paid for our loss. We sometimes do get paid for a loss we may not have suffered. However, for politicians, beyond grown-ups, this situation is intolerable often, and we find situations where actually they pull out. So we've seen a number of instances recently of Bahamas walking away from the table of participating in CCRIF, of the Solomon Islands walking away from the Pacific facility, of a mechanism for it was used in Mexico for the multi-cat deal based on a pressure in a box for a hurricane parametric deal, where the basis risk was simply high enough that it created situations where one day they had a loss, they didn't get a payout, and they walked away. And if we want these mechanisms to thrive, we need to continue to research how to reduce the basis risk so we don't make it intolerable for politicians. And finally, when we're thinking through the protection gap, I mean, the term protection gap is widely used. The protection gap should mean across all protections. It's not simply what is the missing insurance. It's actually any way we can reduce the amount of risk. So maybe by implementing a building code, we can shrink the protection gap. Maybe by enforcing zonation for flood, we can reduce the protection gap. And then we can look at a micro-insurance payout or an indemnity insurance payout as also helping reduce the protection gap. But we constantly need to think of risk reduction and risk transfer as a pair of twins that are best work together. Thank you.
Thank you, Robert, for describing the requirements for fair and sustainable risk transfers. Phil Evans is our next speaker, so Phil, you have the floor now.
Thank you. Good afternoon. It's a real pleasure to be able to speak on this panel. So what does someone from a Met service have to offer to this debate? Well, if nothing else, I won't be using a lot of insurance industry jargon, so some of you might be grateful for that. But I work for an organisation that has 600 scientists working on weather and climate modelling and its impacts, and this is a set of disciplines. This is a set of disciplines that's directly relevant to the insurance sector. Secondly, we're an organisation whose primary task is the protection of life, livelihoods, and shelter. And in the pursuit of that goal, actually, risk is part of our business. Thirdly, we're closely connected to and often inform our government's policy related to environmental risk management. And finally, and increasingly, through our work internationally in development, we're seeing how the orbits of different organisations involved with risk management are increasingly overlapping. And finally, over many years, we've worked with the financial resilience community, sometimes successfully, sometimes less so. And it's from that experience I'm going to draw a few observations. There's a lot of talk at the moment about public-private partnerships and their sustainability. In many respects, I find that term quite unhelpful because it oversimplifies a complex set of organisations and sectors. The basic fact here is that there are many types of organisations whose interests in risk management are increasingly overlapping, and we need to find ways for these organisations to work together. Each of these organisations view the world through very different lenses, different drivers, different constraints, and very different strengths. If we are not careful, we can look into these organisations that we're not familiar with and judge their behaviour and their motives as bewildering, but only if we haven't taken the time to understand and be very explicit about our roles, our drivers, and our objectives. This sounds a lot like motherhood and apple pie, but I think the point is it's absolutely crucial, and I'm still not sure enough attention is given to it. Increasingly, as we talk about integrated strategies for disaster risk reduction, we've got to recognise that the institutions and bodies behind all of this must be more integrated in their thinking to support it. For example, in my domain, frankly, we need to do a better job of understanding how our science can meet the needs of industry, but I would say that industry needs to understand a little bit better about our drivers and constraints. And I'd also say that although this awareness is important in building partnerships and relationships, it doesn't happen very easily in a vacuum. Any opportunities to build multi-sector, multi-partner projects, initiatives, institutions are a golden opportunity to do this, and I think the IDF is a very good example of that. Now, as an organisation, our primary task is about the exploitation of science, and there's a couple of areas of that I think are very relevant to this debate. The first one is the communication of science to policymakers. This is a crucial aspect to inform governments about the evolving understanding of the risk burden that they are facing. There are two consequences of that dialogue and that information that we provide that are relevant to the implementation of risk transfer mechanisms. Firstly, the sort of advice that an organisation like us can provide informs adaptation and mitigation activities to reduce risk. And this reduction of risk is essential to the sustainable implementation of risk transfer solutions. Secondly, with an understanding of the risk burden, organisations are better informed to construct their regulatory funding and investment frameworks to more directly support risk transfer implementation. So I would say that public science organisations need to understand the importance of their role in this. And actually governments should be clear about their needs for advice about risk. In the UK, we are very fortunate that the relationship between government as a commissioner of advice and those science organisations that provide it is very strong. And there's a very strong commitment in UK government to embed that advice, that scientific advice, into policy. Just as a recent example, we had some bad floods about 18 months ago. As a consequence of that, some work was commissioned for us, which for the first time actually undertook a proper analysis of the risks that the UK was facing from flooding, not based on a historical record, which is quite limited, but actually understanding what our current climate could throw at us in terms of extreme events. This is not related to climate change, and actually we found that the likelihood of extreme events in the UK, extreme flooding events, was actually significantly higher than I think government policymakers were appreciating. And that immediately flows through to government policy understanding, risk understanding, and decisions about investment. The second area of translating science I'd like to talk about is what's done to broader interest groups, to industry, NGOs, and really importantly to the general public. As weather modelling and climate modelling becomes more sophisticated, we just cannot make the best use of that capability without starting to talk in terms of risk, probability, likelihood, whatever you want to refer to it. And this, I think, is where there is a common interest with the insurance industry. Like many others, we are increasingly spending effort on the social science elements of this understanding. But similarly, as we do this, we increasingly appreciate how challenging it is to develop risk understanding in the general population. I personally think this challenge is too big for any one organisation, any one sector, and I think many organisations need to play a role. An interesting example of perhaps the role Met Services can play is there's reasonable evidence that those countries who routinely provide weather forecasts in statistical terms, likelihood of this or that actually those countries have, generally speaking, a better understanding of risk than those that don't. But anyway, I think this is a critical issue.
Thank you so much, and thank you to all the panelists for your very valuable insights and recommendations. And I now hand over to my co-chair, Mr. Mignon, to chair the open discussion.
Shall I carry on? Someone obviously decided it was that boring they needed to say something else, so I appreciate that, thank you. I've completely forgotten where I was. Yes, so risk understanding in communities and organisations, I think, would benefit from a more joined up and integrated approach across a number of organisations. So actually, we don't compound the problem. Actually, by taking a joint approach, we help solve it. In this question of translating and making use of science, I think that there's an important issue about open data. The private sector in particular is understandably hungry for public sector data and new research. And in fact, the Insurance Development Forum's identified a number of programs that, a number of sources of this information, and that in itself is valuable. But I think in terms of making data available, I think there are two important issues. One is reducing the friction of making this information available, making it as easy as possible for people to access, and I think, though it sounds dull, that the implementation of common standards is crucially important. And the second point is that it needs to be sustainable, accessing this information. Of course, sustainable for users, but actually sustainable for the providers, because in many countries there are all sorts of complicated issues around this. So finally, despite all the points I've made, I think it's important to remember that the solutions to the issue we're working on, or many of them, actually are social and at a human scale. I think the key, in many respects, to sustainable public and private partnerships is born out of mutual transparency, and in each client country where human-scale conversations take place in ministries and businesses and communities, that understanding and clarity can emerge, and we can help resolve these problems. Thank you.
Thank you, Phil, for drawing our attention to the various roles of different players in the field, different organizations. The next speaker is Liliana Cardoso de Cano. Please, the floor is yours.
Muchas gracias, Rica. Bueno, desde Paraguay también quisiera compartir con ustedes la experiencia que venimos desarrollando en cuanto a transferencia de riesgo y los seguros para la resiliencia. ¿Qué mecanismo se requiere para crear un seguro viable? El tema a tratar. Antes, quisiera robarles 10 segundos de su tiempo para mostrar diferentes aspectos de la economía del Paraguay y valorar el crecimiento también que hemos experimentado en los últimos años con una proyección en alza. Estamos posicionados en el 10º lugar como exportador mundial de trigo, en el 9º lugar como industrializadores de soja, en el 8º como exportadores de carne y exportadores de grano, en el 7º lugar como exportador mundial de maíz, en el 6º lugar productores de soja, en el 5º lugar exportadores de chía, de harina de soja y de harina de soja. En el 4º lugar, estos productos como harina de mandioca, soja, carbón vegetal, aceite de soja. Tenemos la tercera flota más grande del mundo, después de Estados Unidos y China. También nos posicionamos en el tercer lugar como productores y exportadores de la yerba mate. En segundo lugar, productores y exportadores de stevia, que nosotros lo llamamos en Paraguay CAGE. Y por supuesto, en primer lugar, como exportadores de energía y de azúcar orgánica. Aquí una vista panorámica de nuestra linda ciudad de Asunción, capital de la República del Paraguay, y también las represas de Itaipú y los edificios del World Trade Center. Una visión de contexto de nuestro país, podemos observar el mapa, que somos el corazón de América del Sur, que palpita desarrollo. Somos un país mediterráneo con un territorio de 406.000 kilómetros cuadrados, 7 millones de habitantes, de los cuales el 39% en la zona rural y el 61% en las zonas urbanas. El 22,6% del Producto Interno Bruto representa al sector agropecuario, del cual el 17,4% el sector agrícola. La penetración de seguros en el país es muy baja, poca conciencia de seguro aún desarrollado, con un 2,23% del Producto Interno Bruto. Los riesgos climáticos principales que afectan al país son la sequía y las inundaciones, que han causado mucho daño en el sector agrícola y en el sector ganadero. Las más grandes inundaciones se registraron en el año 83 y en el 95, y la sequía en el 2008 y 2012, que tuvimos intensas sequías que dañaron nuestro cultivo y nuestra ganadería. Tenemos 35 compañías de seguros habilitadas en el país y 982 cooperativas con 1.500.000 socios afiliados a las diferentes cooperativas. 250.000 unidades agropecuarias, y de estas 250.000 unidades, 225.000 corresponden a pequeños productores. Bueno, volviendo al contexto sobre el microseguro paramétrico de índices para pequeños productores, el objetivo principal fue crear una herramienta de resiliencia que esté al alcance del pequeño productor. Esto para que en caso de eventuales condiciones climáticas puedan proteger sus pérdidas. El propósito fue que la compañía de seguros pueda ofrecer un producto que demande el pequeño productor. Por supuesto, esto basado en alianzas estratégicas con cooperativas agrícolas apostadas en la zona de influencia donde va a ser desarrollado el producto. Esto permitiría también que el pequeño productor proteja sus cultivos ante condiciones adversas que pudieran presentarse. Y con esto se espera que se mantenga el nivel de ingreso, que se mantengan los activos de los pequeños productores. Elementos tecnológicos. La tecnología es la columna vertebral de todo este proyecto que estamos desarrollando. Sin esto es imposible desarrollar un seguro paramétrico o de índice. Dentro del programa se definió la colocación de las instalaciones de 25 estaciones meteorológicas, agrometeorológicas, en la zona de influencia para desarrollar el producto paramétrico. Esto transmitiría en forma directa todo lo relacionado a la humedad, al viento, a la intensidad de las lluvias, también a la radiación solar, la dirección de los vientos, entre otros datos. Cabe resaltar que para el programa que estamos desarrollando se contrató un experto agroclimatólogo que trabaja muy de cerca con este proyecto. Llevamos ya recopilando un año de datos transmitidos de estos equipos agroclimáticos. Estos datos compilados nos permiten, un año de datos compilados nos permite estar en el proceso de desarrollo del producto. Y este producto tiene una particularidad diferente a lo que es un seguro normal, porque tiene que ser un seguro fácil de entender, con pronto pago, sin mucha burocracia, transferencia directa a las cajas de ahorros de los productores en las cooperativas de la zona y, por supuesto, un bajo costo administrativo. Es importante que podamos sostener todos estos elementos teniendo en cuenta el bajo costo del seguro en que va a ser comercializado. Por supuesto, tiene que tener también un bajo costo de gestión y un bajo costo administrativo para que sea sustentable el producto. Esto, por supuesto, esto es posible desarrollar gracias al apoyo tecnológico. Las alianzas que hemos hecho, importante también destacar que la aseguradora Tallí es única de origen cooperativo, es una de las razones por el cual el BIC el Banco Interamericano de Desarrollo, optó por nuestra institución, por la filosofía de principios cooperativos y mutuales que tenemos. Los organismos que financian multilateralmente esto es el FOMIM y el Fondo Multilateral de Inversiones y el Australian AID a través del Banco Interamericano de Desarrollo. También tenemos apoyo del gobierno a través del Banco Central del Paraguay, la Superintendencia de Seguros que regula la actividad de seguros en Paraguay y también la DINAC, que es la Dirección Nacional de Aeronáutica Civil, cuyos datos nos habían facilitado en el inicio del proyecto. Bueno, hemos identificado como región de enfoque el departamento de San Pedro. Podemos observar ahí el mapa donde tenemos coloreado. Es una población con 38.000 habitantes, 21 distritos, una zona de alto índice de pobreza y bueno, el cultivo de sésamo es la agricultura de renta. Cuando mencionamos datos específicos nos referimos a 4 puntos muy importantes. ¿Quiénes van a ser beneficiados? 5.000 productores de la zona. Pretendemos abarcar 15.000 hectáreas de cultivos de soja. Y por supuesto, este proyecto tiene una duración de 4 años. 2 años que ya tenemos ejecutado, donde habíamos ya adquirido las estaciones meteorológicas, las instalaciones de las mismas y la recopilación de datos que venimos realizando a lo largo de 1 año. Estamos iniciando el 3er año del proyecto con el desarrollo del producto en sí para ser comercializado en esa zona de influencia que es el departamento de San Pedro. Este 3er año pretendemos que la superintendencia nos pueda aprobar el producto y que en septiembre podamos ya iniciar con el plan piloto con 500 productores que estén asociados a las cooperativas de la zona. Por supuesto, esto para el 4.º año, con los ajustes respectivos de acuerdo a este plan piloto, ya extender al plan comercial y llegar a los 5.000 productores. ¿Cuánto cuesta este proyecto? Este proyecto tiene un costo de $1.241.300. El 38% es aporte de la aseguradora. El 28% corresponde a la Australian AID y el 36% del FOMIN. Agradecemos infinitamente realmente a estas organizaciones que apostaron y creyeron en nuestra institución. Bueno, para mirar un poco avances del proyecto, también tenemos algunas imágenes de las estaciones meteorológicas que se han colocado en los diferentes puntos de la zona de San Pedro y algunas reuniones constantes que tenemos también con el BITFOMIN para ir monitoreando el avance del proyecto. Así también la capacitación fundamental en todo este proyecto. A lo largo de estos 2 años que ya transcurrieron con nuestros técnicos, ingenieros agrónomos, venimos desarrollando también secuencia de capacitaciones, todo en base a la educación financiera, a la parte de seguros y también en buenas prácticas agrícolas. Bueno, finalmente decir, para que esto funcione, volvemos al inicio, ¿qué se requiere para crear un mecanismo seguro viable? Todos los entornos que se mencionan ahí, tanto el financiero como legal, tecnológico, cliente, la economía solidaria y la industria del seguro, por supuesto, deben funcionar y ser articulados para que este proyecto pueda resultar un éxito. La sostenibilidad, por supuesto, pretendemos que este producto sea sostenible, inicialmente con el sésamo como producto de lanzamiento, utilizando estrategias, alianzas con empresas financieras y el Estado también, ¿verdad? Posee un potencial de ser replicado con otros productos en otras zonas del país, y por supuesto también cubriendo otros tipos de fenómenos, a más de sequía, también podemos ir implementando a lo que es inundaciones o granizos. Bueno, muchas gracias.
Thank you very much, Liliana, for sharing the innovative approach that you've been using in Paraguay with the agriculture producers, and also talking about what is needed to make it sustainable. Then we go to our final speaker in the panel, Sofia Valais. So the floor is yours, Sofia.
Good afternoon. I'd first like to thank the organizers for having me here in the panel, and thank you all for being here with us. We've heard from the previous speakers that weather-related disasters are on the rise, and that there is still a huge protection gap to fill. As important as it is, it's also equal more. Schemes are designed in such a way that it brings maximum benefit to those insured, so that they can be more resilient. Multiple and complex risks and problems that communities or governments face call for an integrated risk management. If we take a typical vulnerable community in Africa, they face shortage of rain, but on top of that, they farm depleted soils, they have poor access to productive inputs, poor access again to financial services, including loans. The list is long. So we can clearly see that insurance by itself cannot really address all these interrelated and complex problems. We need an integrated risk management, of which insurance can be part of the solution. Risk transfer can also lead to risk profiling, and can also lead to a considered decision on how much risk to retain, how much to transfer, and also how to manage the retained risk. We know that ARC requires governments to produce contingency plan, which can lead the government to look into a broader risk management. It's also true at micro level. Back in 2010, when Ethiopian farmers were given two policy options to cover them against shortage of drought, they had to decide, looking into again their risk scenarios, which one is the best. The first option was designed to pay more frequently as compared to the other option, which comes with lesser premiums but also pays less frequently. Farmers chose the first option with higher premiums because they told us they do not have enough savings to comfortably retain the smaller risks. Insurance combined with risk reduction activities can give more protection to insureds. Risk reduction activities can reduce the impact of both insured and non-insured losses. For example, a community insured for drought can engage in risk reduction activities, let's say flood diversion, so that they can also reduce the impact from flash floods. Risk reduction can also lead to lesser need for risk transfer or lower premiums because premiums largely depend on the volume of risk transferred. R4 is a program of Oxfam and WFP, and it provides vulnerable farmers with integrated risk management services. These services include risk reduction, risk transfer, saving, and credit. The major innovation of the program is it enables farmers who cannot afford to pay for insurance to pay for their insurance through work or labor. What we do in this program is we convert the premiums into number of days that farmers can work. They work for those days on different risk reduction activities that are designed to reduce the impact of losses, and then they earn their insurance. One of the reasons the program has shown success is we work very, very closely with farmers. They are the best people to know what are their competing priorities and how best we can design the policies so that it can address their needs. Our impact evaluations have shown us that farmers are more resilient, having more assets, and also relying less on negative coping strategies. However, we need to keep in mind that all these changes are not attributable to insurance only, but to the whole integrated risk management, which includes the 4 Rs or the 4 risk management services that I described earlier. Before I close, I would like to emphasize the importance of having a good monitoring and evaluation plan as part of an insurance scheme. Monitoring and evaluation will help us to ensure we are on the right track, and it will also help us to make changes if necessary as we go along. Monitoring and evaluation will also enable us to corroborate our theories with evidence, which is glaringly lacking now. Thank you.
Thank you, Sofia, for giving us another example of working with farmers and looking at insurance as part of the integrated risk management system. I now give the microphone to Simon, who is going to continue.
Thanks, Rika. So in the interest of time, I'm going to go to the floor. We're going to take 2 interventions from the floor, and then we'll open up to some questions. The first intervention, and they're both very interesting interventions. The first one's going to be from Javier Rodriguez de la Vecchia, who is the CEO of Zurich Insurance here in Mexico. And Javier, where? Oh, here he is. Would you like to come up, Javier, and take the mic? Javier and Zurich Insurance are working on a really innovative program here in Mexico, which I think highlights that the insurance industry isn't a big bad financial services sector. They do want to work with communities to build disaster risk reduction and resilience. So, and this example from Javier is a great one to demonstrate where the insurance business can play a role and seize their role in building resilience. Javier. Take this one.
Thank you, Simon. Briefly, well, the project that Zurich is developing in Mexico so far for 5 years is a non-traditional insurance approach. Actually, we are not doing insurance. What we are doing is risk prevention. We are trying to show people how they can deal with risk in these communities. 5 years ago, we decided to go with this project. It's about flood resilience in the poorest community of the poorest community in Tabasco, in Mexico. These communities are 21 communities that usually spend 6 months underwater every year. And what we are doing there is to show them how to understand the risk they have, how they should deal with this risk, and how they are able to go back to the initial position before the natural hazard they have there. It has been quite an experience for us because we have implemented this not only as a flood resilience program, but also as an economical project for these communities in this region. Currently, we are working with 21 communities, 8,000 people, and now we have 1,200 planned projects for resilience. Now people understand where to go, how to act, and what are the priorities during this natural hazard in any moment. In this case, Zurich has been working with several institutions, but the main institution that we are working with is the Mexican Red Cross. Has been quite an experience for an insurance company because the humanitarian help that we are receiving from the Mexican Red Cross in this case has been key in terms of confidence from these people. So we are providing not only economical resources to this project, but also experience in terms of risk, in terms of how to measure this development, and also in terms of project management. So this is an example in which an insurance company is not doing insurance in this case, but is learning a lot of risk. Is learning how to measure and how to deal with risk in these poor communities. And in the future, we hope to be able to develop a product that really helps people. But in the meanwhile, we need to bring up to these communities, to upskill these communities to understand how to deal with insurance, because if we just go with insurance to these communities, it wouldn't help, because we are not attacking the root of the situation that they are living 6 months per year underwater. So this is our experience in Mexico. Thank you very much.
Thanks, Javier. So the other intervention from the floor is going to be at a different scale, and from Ulrich Hess, who is a team leader in the G7 Insure Resilience Initiative. And this is the initiative that started with a commitment from the G7 leaders in about 18 months ago to build climate risk insurance to support resilience. And Ulrich will just quickly describe the program and what it's trying to achieve.
Thanks, Simon. Yeah, just a few words on the Insure Resilience Initiative. With the, as you have heard, there's a product out there that has scaled in a lot of cases, can be sustainable, and can reach smallholders. There's a major innovation, insurance innovation here that has happened. That is called parametric insurance. You have heard it. That has happened something like 15 years ago. Now we see that has scaled in a lot of places. Therefore, there is actually a market out there, and one of the most advanced markets in this area is actually in Mexico right here. So there's a total of almost 200 million insured people out there, farmers mostly, against nat cat insurance or nat cat risks. And most of them in China, India, but also in Mexico. So here's actually the best example. So there's a market out there thanks to this index-based insurance that you have heard of. And that's about to scale to become more sustainable because of 3 game changers that we see out here. This is becoming more sustainable and even more reachable for smallholders because of three factors really. One is remote sensing. So we see that we can use satellite data essentially to base the insurance on to basically cover all areas and be able to write risks even where you don't have weather stations. The second is digitalization, digital delivery. We see, of course, out there much lower cost delivery mechanisms and how this insurance can be sold and delivered. And the third piece is that we see new business models, new delivery or mechanisms, aggregators, such as input suppliers, such as financial institutions, but also agricultural buyers, for example, cotton companies. So all these reasons are out there now to show you also that, or there's a few reasons now to believe that insurance can become a sustainable driver of resilience, or builder of resilience, enabler of resilience, and can help you also achieve some of the Sendai targets. I would like to quote only number C of the third target, which is the reduction of disaster losses, because you can both on the denominator, on the top part as well as the bottom part, you make a difference with insurance. Thanks to insurance, you increase GDP. It's about promotion of economic development. But you can also, thanks to insurance, reduce the losses. So a good way to achieve target C. So finally, why all of this is important, why has the German government started this initiative? Now the G7 has taken up a major initiative called Insure Resilience to scale this. Well, because it can reach the poor and vulnerable people out there and build their resilience. So the aim of the Insure Resilience initiative is to reach 400 million additional beneficiaries of insurance. Of those 400, 100 million shall be reached directly through direct insurance mechanisms, actual insurance, and 300 million through indirect mechanisms such as risk pools. So we now try to build sustainable business models for direct insurance that can be scaled. So that's what we do in Paraguay as well, together with partners like Taji and the government and insurers. We work in India on catastrophe insurance, including flood index insurance, and Zambia and Southern Africa. So that's what Insure Resilience is all about. So we are in this for the long haul. We hope to reach 400 million additional beneficiaries by 2020. Thank you.
Thanks, Ulrich. So we have a very short amount of time for a few questions. So if you want to ask a question, I see a few hands up. We'll take. I see 1, 2, 3, 4 hands. So I'm going to take those 4 questions. We'll take them all And then if the panelists would like to just make note of the questions, and then we'll do an answer to the questions and a wrap-up from the panelists all at the same time. So I'll come back to all of the panelists one by one. So starting there at the front with Coco.
Thanks very much, Simon, and to all of the panelists. My question goes especially to Sofia, but any of you who want to weigh in on the relationship between community resilience, livelihoods, and the ability of community members actually to stay where they are. We notice worldwide bad weather and other kinds of risks often send people on, they often set displacement underway even. What role can the risk tools that you're talking about help build community resilience so that mobility, migration, and other kinds of movement build resilience rather than just undermining and pulling people back down into poverty? Thanks.
Okay, there was one question right at the back, and then there were two in the middle. So could you folks just put your hand up? There's one at the back there, and then these two in the middle.
Thank you. Very loud. I'm Jonathan Reeves from ActionAid UK. Thank you for the interesting presentations. A couple of you mentioned the question of the evidence base and the need for monitoring and evaluation. I think that's a very important point I'd like to echo. Also, I think what needs to happen with the G7 process and the IDF is that it needs to slow down a bit, become more inclusive, look at the evidence. First of all, agree some principles and criteria. What do we want to achieve from the insurance and other risk management schemes aimed at the poorest and most vulnerable? Then let's gather the evidence. Let's look at how different models, and there's a whole diverse range of models, how are they actually faring against these principles and criteria? And then let's allow countries with inclusive evidence-based dialogues to determine what kind of models for managing their climate and disaster risk they want to go ahead with. There are risks, as Sean mentioned, with ploughing ahead with models that we don't yet have the evidence on. Some of them are at risk of being not cost effective, but also exacerbating inequality and vulnerability. And I think if we take the time to look at the evidence, examine schemes like the African Risk Capacity, for example, how that failed the people of Malawi, then we might need to go back to the drawing board for some of these schemes. So I think we need to slow down, be more inclusive, evidence-based. And actually, if anybody here who is interested in looking at insurance schemes from an independent perspective wants to come up to me, or indeed one of my friends here from other NGOs at the end, we're interested in forming a more of a network to take an independent, critical view of what's going on. And just one last term I want to, because nobody's mentioned this yet, I don't want this audience to be deprived of the fun we have in the climate process. The issue is climate justice. There's been suggestions that donors should be paying for certain things, but we need to ask the question, who should be paying for the burden of the climate risk faced by the poorest and most vulnerable people that was caused not by them, but by the rich nations? So that should be in the principles that I've mentioned. Thank you very much.
Is this still on? Hi, I'm Maggie Ibrahim with World Vision UK. Thank you very much for all of the speakers. I see the importance of highlighting that I think there's a significant disparity on ideology here between parametric insurance providing risk sharing and understanding risks and delivering solutions to empower people to make decisions so they can tackle their own risks and protect their own livelihoods. So parametric insurance, from what I understand, puts all of the information into a model and spits out information for delivery. Whereas an empowerment process around risk insurance through communities, understanding of risks and applying these risk informations into local adaptation or development plans does something very different. It helps people come together, it helps empower their sense of community and opportunities. We didn't really hear about the opportunities that climate change or risks also pose. So I just think it's important to see that we're coming from it from different ideological perspectives. I'm really keen to learn more about insurance in terms of how to get financial attraction from the private sector to ensure more pro-poor empowerment approaches rather than parametric. And I kind of have yet to see how I can grab onto finances to empower that risk insurance approach rather than a parametric approach. So if you can help me, I'd be very happy to have many conversations and to educate myself. So thank you very much.
Thanks. And then the last question at the back there.
Gracias. Mi nombre es Germán Alfaro. Vengo del Instituto Privado de Investigación sobre Cambio Climático, ICC. Este instituto es financiado por el sector privado de Guatemala, específicamente por el sector azucarero y bananero. Mi pregunta va más directo al tema de cómo podemos acceder a esos fondos para ejecutar los modelos de riesgo que mencionaban a un inicio, ¿verdad? Y cuáles serían esos requisitos claves para obtener acceso a ellos. Si específicamente tenemos que tener el apoyo de las instituciones de gobierno o podemos acceder solo como sector privado a estos fondos.
Okay, thank you very much for those questions. I'm going to go along the panel and ask panelists to answer those questions which they feel they have something to add to, and but also a final, just a 1-minute wrap-up of your the main points you'd like to for the audience to take away from this. And I'm going to start at the right with Sofia.
Thank you. I'll start with Coco's question. We haven't measured the relationship between insurance and migration. That was not one of our indicators. But generally, our goal is to increase food security. And with that, we also want to diversify income so that farmers do not have to rely 100% on their rain-fed farms. So with these sustainable livelihoods, we expect this mobility to reduce, but we haven't really measured how it's been affected by the R4 program. Related to a comment on evidence, you're right, the first thing is to determine what is really the objective and what do you want to do. In our case, it is resilience, so we have come up with different indicators that can measure resilience and then track them along the way. One of the indicators that we are measuring is assets. It can be defined by savings, grains, some of them save in livestock, so we measure all of those. We measure income, and we also see the coping strategies. They have positive and negative coping strategies, and we try to see if they are relying less on negative coping strategies and moving to the positive ones. Okay, so I will end with my statement, and what I really want to close with is to keep the focus on resilience, because it's very easy to sideline this agenda with scale, because scale is really exciting, and before we know it, we will be counting numbers and giving less attention to what we set out to do in the first place, which is improving the life of farmers or government. So I'd really like to point out that we shouldn't really lose focus of what we set out to do in the beginning. Thank you.
I'll try and address some of the comments that a few of you, well, Jonathan mostly made on the evidence-based. And I think what we're talking about here is there are at least 2 or 3 different areas within the microinsurance space that you've heard from the panel up here. My specialist area is the microinsurance area, and I do believe there is a lot of evidence out there, certainly built up over the last 20, 30 years, that shows that if you build and co-create products within the community in the same way as Sofia is doing with ours and many of our projects are, and you build that trust, and you actually get the ownership of the insurance entity to belong to the community, then it will grow. And we've got lots of evidence around that. I won't comment on the evidence around the African risk capacity and parametrics, because there are other people on the panel that are better qualified to do that. But I think that is an angle you're probably aiming at as well, is where is the evidence? I don't propose to slow down on the IDF based on the microinsurance side. I think there's plenty of good evidence out there as to what we do. It is qualitative and quantitative, and certainly some of the things that we're trying to do around that is trying to gather evidence as to how quality of life is being increased for the betterment of those communities by actually speaking to the families in the communities on a regular quarterly basis. So seeing their path of growth over the 5-year period, to seeing how much more confident and empowered they become to take on some of those risks. And I think that is an area which is quite new. This is what we're trying to measure the impact that way as well. So I think I'll pass on some of the other things because others are better qualified to do that. But to me, it does come back to making sure the communities are literate enough to talk about insurance and understand the risks and share those risks within those communities. And I think we've been doing that for many years now, and I think we can move on quite quickly on some of these things. Thank you.
Thank you. I'll sort of touch on Maggie's comments about, which, if I understand correctly, is about the different philosophical approaches underneath different approaches to risk management. I can't really comment on that, but I think it's interesting that prior to today, the WMO has had a conference about early warning systems, and I think that's an interesting example of a set of services that potentially allow communities to respond to events in a positive way. I think the point is, all of these aspects need to work together in a coherent fashion. We need to think about how early warning systems, community information about risks outside of events, insurance, all fit together. And it comes back to the important point that without risk reduction, actually sustainable implementation of risk transfer mechanisms isn't going to work very well. So I can't address the fundamental point, but I think there's an overarching point. These approaches need to work together sensibly and be integrated. In terms of summing up what I think are the points I wanted to emphasize from my intervention, is probably 2 really. I think it's really important for governments to understand, to get the right advice, whether it's scientific or otherwise, to understand the risk context in their countries, so that they're well informed in terms of the regulatory frameworks they put in place, the funding they put in place. I think that's really important. And secondly, I suppose linked to that is the point about data availability and standards and interoperability. It's not a particularly glamorous subject, but I think it's actually fundamentally important.
Bueno, ya agradecer por participar de este panel, la invitación que he recibido, y como compañía puedo decirles que estamos satisfechos en trabajar en un seguro para la resiliencia, donde vamos apoyando también al sector más vulnerable, más pobre de nuestra sociedad. Bueno, además, como somos compañías de origen cooperativo y mutual, Tengo que resaltar que uno de los ejes principales en lo que estamos trabajando es la responsabilidad social empresarial. Entonces, este producto que estamos desarrollando, más allá de ser un microseguro para la comercialización, va más con tinte social. Y comentarles también que como compañía no es el único producto de microseguro que estamos desarrollando, también tenemos otras experiencias en microseguros de vida que venimos desarrollando y pioneros en el mercado paraguayo. Gracias.
Thank you. Well, I appear almost to have the final word. And I mean, I think those were excellent exploratory questions, and I think they reveal something very profound that is going on, is that we are at a very exciting and experimental new age around the application of two key areas. One is the expansion of risk modeling beyond its simple focus on looking at monetary loss to a wide range of other metrics, and then the experimentation of new insurance mechanisms, all of which is new in the last 10 or 15 years, with the potential to dramatically expand the coverage of those insurance systems themselves. These two agendas, I think, they are moving quite fast. We need to ask very good questions about them. We need to test them. We need to, they are like new inventions. They're not all going to fly. We need to identify what is the best of them and actually build on that. We need to explore what the impact of parametric insurance mechanisms is on farming communities in different areas. We need to get a lot of feedback, but it is an exciting time, because I think this agenda really is growing fast. If anybody's interested, I'm giving an Ignite lecture at 5:30 this afternoon on the subject of the expansion of risk modeling to measure the big risks across society around lives lost and financial consequence of disasters, because I think we have the power to audit society as a whole for how it's doing in reducing its risks, the key to the Sendai framework. But I mean, I think in the discussion here, there's a lot of innovation, and if you're interested in this area, then I think you've had some key speakers, especially Aurik, I will call out. I think what Insure Resilience is doing is really interesting, has lots of potential applications, and will no doubt grow in a whole lot of new ways over the next 5 years. Thank you.
Thank you very much, panelists. Before I hand over to Rika to wrap up, I just noted down a few kind of takeaways from my side, and these will feed into the outcomes from this session and then onward into the outcomes from the global platform. So I think one of the key themes is that risk transfer is only useful as part of an integrated disaster risk management strategy alongside disaster risk reduction, aimed at building resilience. We have to keep that focus in mind. We need to increase the understanding of risk, and that will come both through what Robert was just talking about, through new data and technology and applying that to the areas that we're working in, but also through increasing risk literacy, and we talked a little bit about that, Phil and others, about at the individual community, government levels, understanding what risk means and what the different management tools are. Partnerships, we clearly need to keep working on partnerships across government, civil society and the private sector, and also between individuals and communities and governments to address the risks and implement integrated disaster risk management programs and plans that are beneficial for individuals, for communities, but are also are good for governments as well. And then the last one I noted was transparency, transparency about risk, about modeling, but also about the pros and cons of different risk processes, different risk transfer tools, and monitoring and evaluation, and working hard to learn lessons as we go and as this innovation takes place. So with that, I'll hand over to Rika to wrap up.
Thank you, Simon. And on my behalf, I just want to thank all the panelists very much. I want to thank the discussions. I want to thank the audience, and I want to, of course, thank my co-chair as well. I think we've had a very good exchange of views from different perspectives on the role of risk transfer and risk insurance. And I think this is a good basis to move forward. We're going to use this, whatever results we had from this meeting for the outcome document of this platform, and further on from there, the information will be going to ECOSOC for the high-level political forum in July. So thank you, everybody. Thank you very much.